Good morning, everyone. My name is Luke Tannen, and I'm the Executive Director of Chicago Innovation, an organization that educates, connects, and celebrates local innovative organizations cutting across all industries, for-profits and nonprofits, big and small, through a series of events and programs. We are also here because we are a very proud partner and customer of Wintrust. And on behalf of Wintrust, I'd like to welcome you all to today's virtual event, SBA Financing for Your Business. We have a couple great speakers who will be leading today's discussion. But before we meet them, I'd like to let everyone know that if you have a question during the presentation, you can send it to us via the Zoom chat while the event is taking place, so our speakers can see what is on your mind and they can try to respond to it as the presentation goes along. And also, please keep an eye out for a couple polling questions so we can learn more about you, the audience. Now, I would like to hand the Zoom mic over to Michelle Petrie. She's the president of Village Bank and Trust, which is part of the Wintrust Community Banks family. Michelle also serves as branch president of Wintrust Commercial Banking in Rockford. Michelle has more than 26 years of banking experience, as well as consulting experience from owning her own business, Diversitel Consulting, LLC. She's been chairman of the board for the Rockford Chamber of Commerce, the Rockford Area Economic Development Council, and a board member of the Rockford Local Development Corporation for 10 years. It is my pleasure to introduce to you all Michelle Petrie, who will introduce today's presenters.
Thank you for the nice introduction. I'm Michelle Petrie. We're here today to cover the benefits of the SBA 504, 7A, and SBA Express loans as it applies to the Economic Aid Act that was passed in December of 2020. To give you a little breakdown of how the webinar will run, you had the ability to ask questions during the registration process. Several came in. We tried to incorporate all of those into the content. If there's anything we didn't cover, as Joel mentioned, you have a chat button, and we will save some time at the end of the webinar for questions. So please put them in as you're thinking about them throughout the presentation. We'll have 2 poll questions, as he mentioned. We'll be joined by 2 experts who will cover most of the material and walk through examples. If you have any questions for one of the experts after the webinar, we'll post their information so you can contact them. Lastly, Wintrust has a proprietary tool that will lay out the difference between a conventional loan, a 504 loan, and a 7A loan. All you need to do after the webinar is reach out to your Wintrust banker, and they will prepare one for you. So let's get started. We'll go with our first poll question. You should see it popping up on your screen. Have you ever had any of the following? A PPP loan, an Eidl loan, an SBA 7A loan, or an SBA 504 loan? Go ahead and click all that apply. And we will tabulate those throughout the presentation. Now I'm going to introduce our 2 experts. First, Joel Hirscher. He is the director at a certified development company called Growth Corp. He collaborates with banks to develop the best credit structure for borrowers. He has 25 years experience with the SBA 504. He's one of the top performing SBA 504 officers in the country, and he has a very strong relationship with Wintrust. Joel, welcome.
Thank you. Thank you for having me.
Brian Ryans is our Wintrust SBA lending expert. He collaborates with Wintrust colleagues internally and customers externally. He has 15 years of credit, SBA compliance, SBA servicing, and liquidation experience. And he's also a high school lacrosse coach for the last 17 seasons. Brian, welcome.
Thanks for having me.
We're going to start today with a really popular question to differentiate. When do I think about an SBA 504 versus when do I think about a 7A or an express loan? So if we can flip the screen to when we think about an SBA 504 loan. And one more, there we go. So think about an SBA 504 loan when you have owner-occupied commercial real estate, when you have heavy machinery or equipment financing. Remember, with a 504, you cannot finance rolling stock, so no trucks, no cars. With an SBA 504 loan, the SBA issues a debenture. And so in other words, the bank will fund 100% of the loan, and 2 to 3 months after the loan is funded, the SBA will come in and pay off approximately 40% of that loan with a bond. Think SBA 504 when you have a balloon payment coming due on a term loan for commercial real estate or machinery and equipment. Think SBA 504 when you have a borrower that could benefit from a smaller down payment or a longer term. And most importantly, think about a 504 loan when you are looking for a long-term fixed rate. On commercial real estate, 504s can fix a rate for 20 to 25 years. Next slide, please. Think about an SBA 7A loan. When you're financing accounts receivable, that says investments, it should say inventory, equipment, acquisitions of a company, and commercial real estate. Lines can be simpler if they have an SBA guarantee on them, meaning they may not have as much monitoring as they normally would. On an SBA 7A or Express loan, airballs may require a personal guarantee. What's an airball? That's when you have a loan that's not fully collateralized. That's different than a 504 loan. So if you have a collateral shortfall with an SBA 7A or an Express, you may have to pledge personal collateral if there's a shortfall. Remember, Wintrust is a fully staffed SBA team. So loans are approved faster because we're a PLP lender. And what does that mean? So think of a loan that's approved by the bank at one table, and at that same table, the SBA approves that loan because we've been delegated authority to do so. The opposite would be somebody who's not a PLP lender. They approve the loan at the bank, and then they take that package and they ship it off to the SBA. By Wintrust being a PLP lender, we can save a month to 2 months in the process of approval. The SBA Express documentation can be equivalent to conventional, so not a lot of extra SBA financing. And finally, there's no payoff of an SBA 7A or Express loan. It's fully funded by the bank and guaranteed by the SBA. That's different than the SBA 504. So let's go to the results of our poll question. It looks like 77% of people on the phone had a PPP loan, 12% had an EIDL loan, 6% have had a 7A loan, and 5% have had a 504 loan. So certainly weighted to the PPP loan side, but everyone now, at least through a PPP loan, it seems, has some exposure. So I'm going to hand the presentation off now to Joel Hirscher from Growth Corp, and he's going to walk through some of the benefits available on the 504 through September 30th. Joel?
Thank you, Michelle. I appreciate the relationship the Growth Corp has with Wintrust and all of its banks, and especially for being here and giving the opportunity to be able to educate kind of the not only the lenders, but more of so the end customer with regard to SBA 504. As far as the slides that start, we have the 504 freebies that are up until September. And what happens is right now, SBA has a huge amount of collateral as far as marketing collateral. It used to be the case where I would go in and people wouldn't know what SBA. I think Brian can agree with me. What is SBA? People know what SBA is now, mainly because of the PPP and what has happened due to COVID. But this is mainly centered around, at least this presentation, the Economic Aid Act that was passed back in December. Some of the rules and regs, which some of you may or may not know, have not come out fully, but we know what's in the act. We're just waiting for interpretation of the act and how SBA is going to do that. But they've got a lot on their plate, so we're still waiting for rollouts of that. But generally for right now, we've got freebies that are up until September. And what happens is any loan approved up until September, or the end of September, roughly, has a couple of things. One at the top is 3 months of free principal and interest payments up to $9,000 per month. If anybody is out there and had a 7A or 504 loan, They know that the government was making payments for them tax-free during the COVID outbreak. And that's helped businesses immensely throughout the nation. Looking at, the payments, it's a nice thing to have because it's one of the, I don't say marketing, but more so one of the opportunities that people know, okay, well, if I do this loan, once it funds, I don't have payments for the next 3 months once the bond is issued. This is for all loans approved, not funded. This is approved. The question that we get is, what happens if my project's not complete? The key is to get the approval prior to September 30. And then whenever your loan funds, this will be in place. Elimination of 504 fees, basically roundabout way, it's a 2% reduction in fees. The program's great as it is, but with these two, it's gotten a lot of traction and it's worked out well for all CDCs around the nation. Whoever you're going to be dealing with, these fees are reduced, not just with Growth Corp, but all CDCs, 2.65% down to 1.15% in the bond. And then the 0.5% third-party lender fee is also gone. But finally, the bigger driver, I think, right now is rates. Rates are rising. We don't have a rate sheet in here, a rate chart, but we can provide that for those interested. 25-year fixed rate at 3%, 20-year fixed rate at 3%. It's unheard of. It's been a little bit lower in the past several months for those who want to hit rock bottom on the rates and the bond issues, but it's unprecedented times right now as far as rates, and fixing in and locking and knowing what your cost of funds are for a 25-year period is incredible. And then finally, refinancing benefits. We've seen a number of people coming to us saying, I want to refi my loan or extend it out, or at least just lock in my rate at today's rates. And that's been a major catalyst as well. Just knowing after what they're thinking is going to happen with rates and knowing how low they are. I mean, same thing with the housing market. You've got, people out refinancing their houses. You can refinance your building, your equipment, and lock in a long-term fixed rate products such as the 504. Next slide. Debt qualifiers. There's a couple of things here that are in the Economic Aid Act that have changed it. We're waiting for rules and regs. One is the loan at least 2 years old? There's an asterisk. There's a comment down below, pending implementation of 504 COVID-19 relief legislation. Existing notes have to be in place right now for 2 years. That is to be reduced down to 6 months. So once that comes out, they're thinking the next month, but SBA, as I mentioned, has a lot on their plate. Is the property to be refinanced owner occupied? The business needs to occupy at least 51% of the building if they're going to do a debt refi. And then finally, the original debt used for the purchase or improvements of the fixed assets. We have to go back in the history of the loan that we're refinancing and making sure it's eligible. We have documentation that we provide to the client saying what was the date of acquisition, what has happened since that period of time, and to make sure that the project is eligible. There was another comment on here or a line item which talked about 12 months worth of payment history needed to be on time due to various deferments, various debt easing, so to speak, from the banks. That's really changed the perspective from SBA, and that's part of the Economic Aid Act as well. We have received some information on that to say the payment history does not have to be on time for the last 12 months. And each project's a case by case. It's more of a credit decision. Next slide. Debt refi guidelines, eligibility, that's on your Wintrust banker and ourselves. We look at every transaction to determine if it's eligible. Cash out, people like to hear about cash out. We can do a couple of things. My line on this is we get an appraisal, we can go up to 85% LTV or 20% cash out, whichever's less. So if somebody's got a project, we'll show slides later, which will show you how we can structure a transaction for you. The cash out needs to be used for eligible business expenses. You've got salaries, rent, utilities, inventory for 18 months. Most people pay down lines of credit, which is eligible, pay down payables, those types of items. We can figure out a way to make it eligible. We just have to determine that. No cash out, and we haven't had a lot of these because the market in Chicago has been okay and very strong for commercial real estate. But what you're seeing in other parts of the nation is if you have a high LTV loan, we can refinance it up to 90%. So when we're talking about transactions such as 504s, and you've got a transaction yourself where it's like, oh man, I'm really leveraged here. I want to make certain that I can do something to lock in my rate and know what my payment's going to be for the next 20 to 25 years. That works out well. And that's mainly, we can go up to 90% when a highly leveraged property. The appraisal, it says preferred at application. We really require it more so than anything because it drives the bus as far as the transaction structuring. We can look at a transaction to see if it's eligible, but in looking overall, the appraisal is going to drive our structure, and we want to make sure we've got that upfront on a refi transaction. Loans with the federal agency guarantees are eligible. That's an asterisk. Once again, pending implementation, we need to understand specifically what the rules and regs are going to be and how small of a box that could be, because I know there's a number of people online that may have 7As that are like, I want to get out of this. It's a floating rate, or it's got a high LTV, or it's got additional collateral, whatnot. We have to look, and we're going to see how they're implementing this program, but they are going to be eligible. We just don't know when. And then other assets can be used if there's a high LTV. Generally, that doesn't apply. So we would look at a transaction and try to make the transaction eligible under a 504 situation, only with eligibility with using the primary collateral. So usually that doesn't come into the case unless it's under collateralized, which is few and far between. Next slide. So this is the debt refi structure with no cash out that I talked about, the 90%. This is a customer comes to us. It doesn't happen often right now. It did back when the refi first came out in 2010, 11 with the Small Business Jobs Act, which shows the appraised value at $2 million, the outstanding debt of 1.8. The bank then takes, as mentioned before by Michelle, $1 million on their piece. We do 800, and the borrower equity of 200,000 is already in there because the property is worth the $2 million. Basically, what we have to look at on a structure is making sure the bank is more than us or equal. We can never be more than the bank, because a lot of people are like, I want that 3% fixed rate, Joel, and I want most of it on it. We can never be any more than the bank, no matter what the equity requirement is. Next slide. And this is the cash out structure that we talked about for eligible business expenses. Same simple project. Appraised value is two years, or is $2 million. The qualified real estate debt is $1 million. So your 50% loan to value. You've got some equity in your property. You want to tap that. A lot of people are concerned that there's going to be another wave or something's going to happen with a shutdown. It's kind of refocused everyone's mindset on what can happen or what could happen, and cash is king. So in this case, we had a customer who came back and said, I want to cash out as much as I can. This is a situation where our NLTV is 70%. So we can split the loan between the bank and ourselves. The max cash out we can do on this project is 20%, not the 85% LTV. So you're looking at a $2 million project with $400,000 cash out. 20% is the 400. And we would, in this case, the customer paid down their line of credit, which was at $800,000 by the $400,000. And this is the structure that we had. Most banks would look to maybe do this on a conventional basis, but many banks don't like cash out. Wintrust looks out for their customer, giving them a variety of options, as well as Michelle mentioned before. You've got each Wintrust banker is going to be provided with a structure sheet, which will allow the difference between a 7A 504 conventional option. So you want to make sure you reach out to them. Next slide.
Joe.
Yeah.
Joe, we have a question from the chat.
Yeah.
What's the largest amount you can do in an SBA 504 loan?
I mean, we talk about, there's really no largest amount. I mean, I think that, some of the ones that big hitters do, and I'm more of a small deal guy, but I do larger transactions. We're working on a $15 million project right now. We're working on a refi of a $22 million project. We're working. So it's not really how much, it's how much we can participate. So with that, we can do upwards. We're just limited on our portion, upwards of $20 million as the transaction we're doing for refi right now, under a scenario where we're going to be great LTV, but the customer, is been affected by COVID. And we're seeing a lot of customers being affected by COVID where they've been in business for 40 to 50 years, and the $22 million project, we're coming in and going to provide them some relief and a long-term fixed rate. It was interesting because that client, I actually put into that building with a 504 roughly 15 years ago.
So is there ruling by that your participation amount can't be greater than a certain dollar? And is there a limit to how many 504s can be done?
That's kind of a loaded question, but the standard rule is $5 million is the max that we can participate in total bond. So, okay. And that's for any transaction. Now, if you're manufacturing or if there's a project that's green energy, we can do 5 million in tranches. Green energy, we can do 3 different projects. 5 million on manufacturing can be done on various projects. There's really not a limit there. So that's where we max out. So in that $22 million deal or $15 million deal, the customer would have in their equity injection at whatever percent. If it's 10%, we would do 5. And then the bank would do the rest at a higher LTV than a normal 50-40-10 split.
Last question. If a company borrows as ABC company and then it has a holding company for real estate, can they have a 504 loan in each entity?
They can. We're going to look at everything coupled together depending on their eligibility. So what happens is we do transactions where we want to buy a building and then we want to put the equipment into that building and we want to do 504s on both. The longer term fixed rate on an equipment deal, which isn't marketed as much, is critical right now for people, especially at a below 3% rate fixed for 10 years. So we see them coupling together. It's just how much are you eligible for? Generally, I would say 5 million, but if it's a manufacturer, you got 5.5. And then we look at different projects each way. So it's really talk to your Wintrust banker and they can get us involved in the transaction.
Thank you.
Appropriate.
Okay, we're up to our next poll question. So everyone will see the question flash on their screen. In which of the following ways do you plan to support and grow your business over the next 3 years? We'll be tabulating those as you answer. And Brian, we will pass the microphone over to you to talk about 7A and Express.
Thank you, Michelle. Next slide, please. So I couldn't agree more with what Joel was saying about the SBA kind of advertising and being in the forefront of everybody's mind right now, given everything that's happened. And quite frankly, in unfortunate times of crisis, this is when the SBA program shines. I mean, it was created during the Great Depression to encourage banks to lend to customers and clients that may not have qualified for conventional lending at the time. And one of the most important things is, as Joel was referencing earlier, is to encourage more lending and encourage borrowers to seek additional financing. The SBA does offer freebies and incentives to customers for getting new loans, and that's where we want to start with the 7A and Express as well. So just like in the 504 program, the SBA is providing payment relief for new loans through September 30th of this year. Similarly, SBA is offering 3 months of principal and interest payments up to $9,000 per month. And that is per borrowing entity. So you can get a total of $27,000 of loan payments made by the SBA per borrowing entity. The SBA has eliminated guarantee fees through September 30th of this year. Guarantee fees are usually calculated as a percentage of the loan, and given a certain loan structure, you can save upwards of $100,000 in certain cases. The maximum loan amount for an SBA Express loan has been temporarily increased from $350,000 to $1 million. Michelle referenced earlier that monitoring requirements for an SBA Express loan and an Express line of credit are usually relaxed from a conventional loan. This is really important, and one of the big keys to SBA Express loans is, as a lender, we get to close them much faster because we get to follow our conventional policies. It eliminates a lot of the standard SBA documentation requirements and allows the loan to close quickly, and allows, with a $1 million line of credit, it allows a borrower, instead of that being funded as a one-time working capital lump, they only pay on what they borrow. So you can get a maximum line and borrow funds and pay accordingly based on what's outstanding at the time. The SBA has also waived annual servicing fees. This is really important to a relationship bank such as Wintrust. This is what drives us because we get to be very competitive on interest rates. We want to put each customer, review each loan, look at it individually to put them in the best possible loan structure to ensure the greatest amount of success for them going forward. Next slide, please. Michelle, I'll pass it over to you for right now.
Yeah. So details that borrowers often ask us. Any owner of 20% or greater must personally guarantee.
If I could just expand on that 1 second, if you don't mind, Michelle.
Sure.
There are 2 points that I'd like to elaborate on with this. This 20% ownership is for the life of the loan. So if after the loan closes, an investor comes in and purchases greater than 20% of the ownership, they will also have to personally guarantee the loan. And the other part that is important is the SBA does have a 6-month look back period from the time of application. So if the ownership has changed to reduce ownership less than 20% to avoid a personal guarantee, that is something that the SBA will look very closely at and likely require that guarantee of that individual, unless they have completely divested themselves from all involvement with the business, paid or unpaid.
Thanks, Brian. Any owner, any 100% owner, no partners, must assign life insurance. Commercial real estate debt must be 51% owner occupied. Now, we had a question earlier in the chat. What about multifamily or multi-use properties?
I can take that one, Michelle. It's a great question. We see it often in many deals in the city where they have basements or whatnot, and you say a restaurant's using the basement as an occupied space. It really depends on the appraiser. The one thing that I would mention on this with owner user projects like we're looking at is if it is new construction, which we're not seeing a ton of right now because everybody seems to want to buy buildings and refurbish them. But it does need to be 60% occupancy on a new construction project. But in looking at that question specifically, it really depends on what the appraiser and the appropriate square footage is for the owner occupied business itself.
Thank you. What about not-for-profit? That's a question that popped up in chat.
I can answer that one. Not-for-profits are unfortunately not eligible. They were under PPP, but under 504, 7A and Express, those are not eligible companies.
Another question that popped up, Brian, how do you finance trucks and rolling stock?
Trucks and rolling stock can be financed with a 7A or Express loan for up to a maximum of a 10-year term.
Thank you. Some industries and startups are not financeable even with SBA on SBA guaranteed loans. And this is a big difference between the two. Personal assets must be pledged if there's a collateral shortfall. That is not the case with a 504. It is the case with an SBA and 7A. I'm sorry, SBA 7A and Express Loan.
I think that I'm going to comment, and I don't know, Brian, if you want to follow it up. Some people are concerned about appraised values under transactions. We do have appraisals that are come short on some transactions. One of the differences between the 7A and 504 is there's certain LTVs that need to be required. And one of the beautiful things about the 504 is that we do have a 5% wiggle room. So if it's a bit leveraged, and the LTV doesn't come out at your purchase price, but you're in the building leasing, and the seller is your landlord currently, and they won't budge on a price, there are things that can be done to cure that shortfall. And if it's a 5% shortfall, well, then that's fine with us.
I don't have anything to add.
Okay. Rates can be fixed or floating. I know both of you probably have a comment on that.
Obviously 504 fixed rates, that's what we do. And that's our basis. I know with the 7A and Express, it's different. So I'll flip it over to Brian.
Yeah, we will look at it. Wintrust is absolutely willing to do a fixed rate in the right structure. It can be fixed or floating. We're going to look at it in the right structure that fits the actual application at the time.
Okay. And finally, can the SBA fund business acquisitions? And the answer is yes, if it's an asset purchase, if the seller 100% exits the business. Now the qualifier there is they can consult for a salary for no longer than 12 months. And there's no seller debt with amortization faster than the SBA amortization. Guys, anything you want to add in that?
I do not.
No.
Okay. I'm going to follow up with a couple of chat questions here. One question is, does 20% personal guarantee apply to loans that are $25,000 or less?
I just want to clarify, I'm assuming you mean 20% ownership?
Yes, that's what I would believe from this question.
Okay, I apologize. Yes, I believe 20% ownership on less than $25,000 does not require a personal guarantee.
Okay. Thank you. We have back to the multifamily question, Joel. If the leasing office is in one location overseeing multiple buildings and not occupying them, would a 504 be an option?
If the leasing office is overseeing in that type of business, it's really critical as to, there's so many technicals. They need to reach out to their Wintrust banker. I'm not going to punt this, but it seems like I am, because it's got to be owner occupied. So if it's a leasing office and I assume it's like a rental company or whatnot, it really depends on the revenue. It also depends on, we could do their headquarters or their office space, but we can't look at other properties outside of that. And that are mainly investment leased out to other people. Those are not eligible.
Okay. And then we talked about this earlier, but just to reiterate, loan to value on a 504 and a 7A.
I can speak to 504. Standard loan to value, as mentioned, say we have $1 million project, 10% down is 900. And we've got some slides that are going to touch on this in the future here coming up. So the LTV is usually 90%, but it can be higher and greater under 504 because of that 5% wiggle room as discussed previously.
Thank you.
For 7A and Express, the program is designed so it's not collateral driven. So it is important to understand that if there is a collateral shortfall from the business's personal property or assets, that the SBA will require the bank to take a lien on all available collateral. And that's where what Michelle was referencing earlier, it would extend to personal collateral. Once all pledged collateral or all available collateral is pledged, the loan's going to be underwritten and not viewed based solely on loan to value.
Okay. And last question, can you, the maximum for Express is $1 million. Is there a maximum for a 7A loan generally, Brian?
Yes, the maximum for a 7A loan is typically $5 million. And keep in mind that at any one point, the maximum amount of the SBA portion of all of an individual or entity's SBA guaranteed loans is 3.75 million. So the $5 million would assume a 75% guarantee. Right now, the 7A program does allow and provide for a 90% guarantee. So that would reduce the $5 million maximum unless the bank's comfortable moving forward with the 75% guarantee.
Great. Thank you. Okay, we're going to go back over to next slide, please. Joel, to walk through a 504 example.
Thank you, Michelle. Here's the exciting 504 real estate purchase. And it's basically what we discussed just previously. This is a perfect example. The 2.5 million. This is a transaction where the customer was leasing. They'd been leasing for 10 years. They looked at the amount of lease payments they made and said, well, I could be building wealth for myself versus for my landlord. And they decided to purchase. Happy with the building, didn't want to move. And it was going to be substantial cost to move. So this is a $2.5 million project, 50% from the client or from the bank, 40% from us at $1 million, and then 10% down. What they find most of the time is that the monthly payment for the debt service is comparable or less than the rent that they're currently paying. The one thing that they find, depending if it's triple net or whatever, is what are the real estate tax of the building to give me an all-encompassing cost of my monthly payment. And generally, depending on the county that you're in, you're going to see that that's very comparable to the rent that they've been paying over the period of time. So the property needs to appraise out. In this case, your 5% wiggle room, we would need a $2,250,000 appraisal to support a $2.5 million project. This appraised out at $2.5 million and worked well for the client. Next slide. The next transaction is basically with that appraisal shortfall, $1 million project. What happened was we do have the 5% wiggle room, but this was a little bit less than the 5%, which required the customer to come up with a difference. So the requirement for the appraisal was $950,000, appraised out for $940,000. As you can see here, the borrower equity was bumped up by an extra $10,000. And we did not take additional collateral in this transaction. We used the primary collateral. The bank did $500,000. We provided $390,000 in funding, and the customer came up with $10,000, even though it did not appraise at the purchase price. And you can see the terms from the bank and the borrower at the current rates where they're at. Next slide. Finally, this slide's basically in here, and I know we touched on it a couple of times, is 504 is eligible for equipment. Heavy equipment, I'm going to make certain that everybody understands it's heavy equipment. Rolling stock and smaller equipment items, that's Brian's forte. That's something you can do through 7A and Express. But we see printing companies, plastic injection molding companies, all these entities who are looking to buy equipment. It's not something that's marketed, but it's out there. The bank's required, if you see in this structure, a 7-year term. The 504 is a 10-year term. Right now at a little bit around 2.7%. And it works out well for the client. It's just not marketed as much normally. Next slide. Which is back over.
Hey, Joel, quickly, we had a couple of other questions pop up. Is the 20% cash out available always, or is it just until September 30th?
It's always available. It's always been available. Clients, some banks do not, if you're at a different bank, some banks do not like cash out on transactions. We've seen it historically. But that's the program requirement, is we can do cash out. So it'll be there as long as the program is in existence. I don't see anything changing in the near future, so that's available.
Thank you. Okay, Brian, on to SBA 7A examples.
Sure. A couple specific SBA 7A examples that we've had some success stories with. First one was a client who was a 19-year-old metal fabricator for an original equipment manufacturer. They had significant growth over the last 3 years, with revenues reaching $14 million in 2020. That company had a $2.5 million CapEx need that was required to support their growth. The company's performance had been stable through the years, and this was a long-term prospect for the bank. As the company planned its growth initiatives for 2021 and 2022, it was looking to fund new CapEx, an increase to its line of credit, and extend amortization on current equipment loans. Wintrust won the business from the incumbent bank because the incumbent bank did not have an SBA solution available. The business was won with a $2.3 million conventional line of credit, a $400,000 CapEx facility, and a $4 million 7A equipment term loan. The benefits the owner received: they will receive a $27,000 in free SBA loan payments for 2 different companies, or a total of $54,000 in payment relief. The bank receives a 90% guarantee from the SBA, and the SBA and bank fees were waived, saving the customer more than $100,000. Next slide, please. The next example was another client who was a plastic manufacturer for medical, automotive, recreational, and telecommunication industries. They had significant growth over the last few years, with revenues anticipated to reach $7.5 million in 2021. And the company has a $700,000 CapEx need required to support their growth. The company's performance had been stable through the years and was another long-term prospect for the bank. They were also planning their growth initiatives for 2021 and 2022 and looking to fund new CapEx, increase to the line of credit, and extend amortization on current equipment loans. Wintrust again won the business from the incumbent bank because they did not have an SBA solution available, and the business was won with a $1 million SBA Express line of credit, a $2.7 million SBA 7A loan to refinance and purchase new equipment, and a $1.1 million first real estate mortgage paired with an $840,000 SBA 504 debenture. The owner will receive $40,000 in SBA loan payments between 2 different companies. The bank receives a 90% guarantee from the SBA on the term loan and a 50% guarantee on the SBA Express line of credit. And the SBA and bank fees were waived, saving the customer more than $80,000. Next slide, please.
Brian, on that example, was the customer able to get the 3 months free principal and interest on more than one entity?
Yes, they were. Yes, they were. And that's what helped them achieve the $40,000 in SBA loan payments, because they would have otherwise been capped at 27.
Thank you.
Next slide, please. Last example was an existing longtime community bank customer. It was a 39% owner of a die cutter who wanted to buy out an absentee majority owner for $4.9 million. Originally, the minority owner contacted Wintrust, but we weren't comfortable moving forward at the time. They've been operating the business for 10 years and the business continued to grow, and Wintrust was contacted again for help in financing the change of ownership. Wintrust was able to get comfortable with the proposal and financed a 7-year note at 5% with a 20% down payment. The principal pledged her personal residence and an investment property that were both unencumbered as required by the SBA. The loan amount was 2.5 times 2018 EBITDA and approximately 2 times the 2019 forecast. The company saved $100,000 in fees and received $27,000 in loan payments from the SBA.
Brian, this is a question I think this example highlights. It's come up a couple of times. How would I buy out a partner using an SBA loan and getting some of the benefits that we talked about today?
Well, importantly, it's got to happen by September 30th. So we'll start there. Buying out a partner, it's just a straight business acquisition from the SBA. bank's going to be presented with the purchase agreement, and there's going to be a business valuation done. You're going to be required to purchase 100% of the enterprise. And at that point, you'd be personally guaranteeing the loan. There can be some seller debt. I don't know how far down the rabbit hole we want to go right now, but there's going to be a 10% equity injection requirement. There can be some seller debt, but that can only be 5% of the total loan amount. And if it is considered part of the equity, it would have to be on full standby for the life of the loan. But overall, there's going to be a business valuation, making sure that the purchase price is in line with an independent third party's value of the enterprise. And the maximum term amount would be 10 years.
Great, thank you. Next slide, please. We're going to move into our FAQs. I'm going to have Joel and Brian assisting me in answering these. And when we get through these, we'll get back to the Q&A and the chats. And although this presentation was not set up specifically to ask questions about PPP and EIDL loans, we'll try and knock a couple of those off as well. So on to the FAQs. This is for you, Joel. It seems cumbersome to do a 504 loan. Why would I do a 504 loan instead of conventional financing?
That's kind of a misnomer. I mean, the 504 loan has certain requirements. At Growth Corp, we've got a staff that makes sure we vet transactions right up front and make certain that the customer knows exactly what they're getting into. Generally, the information that we receive is the same as what you would do on a conventional bank loan. But why would you do it? I mean, the proof is kind of what we talked about, the 10% down, the 20-year fixed rate, high leverage, kind of real estate transactions to keep cash in your pocket, to support working capital needs, hiring that next employee, not utilizing your lines of credit, and cash is king right now. So that's why you would do it. There's a lot of benefits to the 504 as far as the transactions that we see, and the customers really appreciate that fixed rate for the period of time that they have. Especially, I can't imagine what's going to be like 10 years from now, but interest rates are key, and that's one of the drivers of the 504 along with the down payment.
Thank you. We've been asked this in multiple forms. I have existing equipment debt that's not an SBA loan now, can be with any bank. Can I refinance that debt with an SBA note and re-amortize? Brian or Joel on this?
I will take that one. And the answer is absolutely. Absolutely. This can be refinanced with either a 7A, an Express, or 504 loan with a maximum term of 10 years. It can be paired with refinancing that existing equipment debt and purchasing new equipment as well, if that is of interest.
Great. Thank you. I'm acquiring a building for my business to operate out of, but I need to do some significant improvements. Can the leaseholds be financed under a 504?
Yes, they can. And that's one of the benefits which we have, is not only is it just a straight acquisition, but the improvements that need to be done to the property. Depending on the percentage, we would need an appraisal showing an as-is, as-completed value. But that's one of the benefits, is to be able to include the improvements into the transaction.
Okay. What can I finance with an SBA 504? I think we've covered that several times. Commercial real estate, heavy equipment. To qualify for an SBA 504 loan, can the CRE entity ownership be different from the operating company?
Yeah, the requirement on that is any 20% or more owner is required to personally guarantee of the holding company or the operating company. So it can be held separately. That entity that's set up should be only holding title to the property, and that's it, and leasing it to the operating company. That's the critical piece on that. So yes, that can be done.
How many payments will the SBA make on my behalf if I take out a new SBA loan and fund it prior to September 30th? I think we've covered this a couple of times, but Brian, just to make it clear.
Sure. Reiterate it one more time. The SBA will be making 3 months of principal and interest payments up to a maximum of $9,000 per month per borrowing entity.
Thank you. Can I go out for 10 years on an SBA Express loan?
Yes, you can. That is the maximum term for an SBA Express loan. And absolutely, you could go out 10 years.
I think these both next two are back to you again, Brian. When do I have to pledge personal collateral for an SBA loan or assign life insurance for an SBA loan?
Sure. Start with the personal collateral. If the loan is not fully collateralized, not fully secured, you would have to pledge personal collateral. That, I should say, all available personal collateral would be required to be pledged. There are some rules regarding how much equity would be required in the collateral in order for it to be pledged, but that is the threshold in which you would need to pledge personal collateral. As far as when do you have to sign life insurance for an SBA loan, life insurance on a 7A is required for the principles of sole proprietorship, single member LLC, and for businesses otherwise dependent on the owner's active participation. The amount would generally be equal to the SBA loan amount.
Great. What kind of fees, I know you guys talked about this already, are involved with an SBA loan, and are they financeable?
I'll start, Joel, if you don't mind. There are some fees associated with SBA lending. We previously talked about how some of those are currently being waived through September 30th. The Sba Guarantee Fee, I briefly mentioned it earlier. It is typically determined by loan amount. That is waived until September 30th. There can be packaging fees. The maximum on a 7A is $5,000. The maximum on an express loan would be $2,500. There can also be additional closing costs, but those would typically be on par with conventional loans. Joel, you want to talk about 504?
Yeah, 504, the best way to do it is to reach out to your Wintrust banker that can do the comparison tool model that they have. And it'll provide kind of the fees and costs with a 504 right now reduced as they are in the 7A. But we're seeing mainly, title work, appraisal, environmental costs, things like that are what we consider soft costs, can be included in the project or paid out of pocket depending on the customer.
And I skipped over one thing, if I could just jump in. Yes, those can be financed with the SBA loan. That's the second part of that question.
Okay. I don't currently guarantee my conventional loan. Why would I want to sign up why would I want an SBA loan if it requires my personal guarantee? Give this to you, Brian.
Sure, I can start. The program offers a lot of benefits and extended loan terms from typical conventional lending, lower interest rates that would lower your monthly obligation and make it easier to service your debt obligation, and especially right now, your waiver of fees. Those are three huge benefits that, yes, the personal guarantee might seem like something that might turn people off, but when you look at the entire benefit package you would be receiving on an SBA loan, it is a program that's been around for a long time for a reason.
What options are available if my property does not appraise out on a 504 loan? Joel?
Three different options. One is obviously looking at a transaction, coming up with a collateral shortfall, as referenced in the prior slide that we had, in cash. You can pledge additional collateral to come up with the shortfall as well, or you can just reduce your project size. You see so many times where people are afraid to go back to the seller and say, look, it didn't appraise out. Here's the appraisal that my bank provided from legitpraiser.com or whoever it is. And that's the frustration, is just going back and saying, look, it didn't appraise out. We can lower the project. So those are the three options.
Appreciate it. Brian, this one's for you. Does Wintrust sell SBA loans on the secondary market? How does this impact the approval of new applications?
No, Wintrust does not sell its loans on the secondary market. We have taken this approach because we wanted to act as a relationship bank. We want to provide relationship structures and relationship pricing to provide the greatest benefit to the customer. Common example of a loan structure would be involving a term loan and a line of credit. Loans that are typically sold would combine those, and the working capital need would be a single disbursement on the term loan to allow the bank to maximize the return when the loan is sold to the investors. The loan can't be sold until the loan is fully funded, which is why the working capital would typically be done in a lump sum. Wintrust, we aim to structure the deal so the customer only borrows what they need. You can have $1 million line. If you only need $350, you can borrow only the $350. It also allows Wintrust to provide fixed rate financing options, and something that's not always considered. It allows the bank greater flexibility to service the loan post-closing, as it removes the requirement to seek investor approval for certain servicing actions. So that's why Wintrust does not sell loans on the secondary market.
So in other words, it can make credit decisions without having to get approval. It gives us more flexibility.
Absolutely.
This ties a bit in. Now I'm going to some chat questions into the answer to your question, Brian. Yes, you can have multiple SBA loans for growth and for acquisition at the same time. You can have a line of credit and an SBA 7A term loan at the same time, correct?
Correct.
Okay. Joel, if you have a current SBA 504 loan and you're getting payments now, will there be fees waived going forward? Are these the fees waivers, are they only for new loans?
The fee waivers, if they do have a current 504 loan, they're pretty well aware that government did make 6 months worth of payments. Obviously depends on the industry that you are in, if those payments are continued, and some of them had been continued under the Economic Aid Act for a couple more months. The 3 months worth of savings is primarily due to new transactions that are approved prior to September 30. With every transaction that we're looking at and what we have in the portfolio, some have had those extended out, but I don't see anything coming in the future unless there's a new stimulus package going to be passed. And I'm too busy processing loans right now to figure out what Congress is going to do or what's in the latest, and I wait for that information.
Okay. Brian, in a 7A acquisition, is there a limit on the percentage of a seller note? I believe you said it can't be more than 5% of the note earlier.
If the seller, well, you can have multiple seller notes. What you can't, let me rephrase a little bit. There's a 10% equity injection requirement on a change of ownership, and the borrowing entity needs to inject up to 5%. So the seller debt can be considered equity injection if it is on full standby for the life of the loan, but there can also be two separate seller notes. You can have one seller note that's capped at that 5%. You can have another seller note that they can receive some payments on, but there does have to be the ability for the bank to shut off additional payments to the seller if there is a default on the SBA loan.
Thank you. Joel, does an SBA 504 loan have to be funded by 9/30 or approved by 9/30 to receive the benefits of $9,000 a month for 3 months?
That's what I hit on early in the presentation is the fact it has to be approved. So I don't like to use the word grandfathered, but once approved prior to, which seems to be unheard of, then you're locked in for those payment savings and the fee savings up until September 30. So not funded, no.
Okay. To both of you guys, can you refinance SBA with SBA?
I'll start, Brian. I don't know if you want to add anything. We're waiting for guidance from the SBA, which changed the possibility of that happening with the Economic Aid Act. So as mentioned, it's possible to refinance a 7A with a 504, a 504 possibly with a 504. We are waiting the rules and regs for that. Maybe in the next month that'll come out. But for right now, it cannot be done. But we're waiting for further guidance. Brian?
Yeah, there are some scenarios where you can refinance an SBA with an SBA. Lot of nuances regarding kind of how that works. That it would be a very long answer. Generally, you'd still have to show the proper 10% improvement and whatnot. You might have to get a decline letter proving the existing bank was not willing to refinance it. There are different rules if you're refinancing same institution debt versus another lender. But if this question is of interest to you, I would contact your Wintrust banker to speak about it specifically.
Brian, what's the difference between an SBA Express line of credit versus an SBA Cap Line?
SBA Express line of credit offers a lot more flexibility to the bank. As we previously mentioned, it's typically capped at 350,000, temporarily increased to 1 million through September 30th. You're able to approve the loan and close it within using your standard proven non-government guaranteed lending requirements and policies. A cap line can be a maximum of $5 million. There are multiple different cap lines. There's a little more stringent monitoring requirements, especially based on loan size. There's different types of contract cap lines, builders cap lines, working capital cap lines, seasonal cap lines that all have very specific requirements. So again, if this is something that you want us to look at, contact your Wintrust banker. We'll make sure you have all the details.
Just a couple more questions and then we'll wrap up. Is it possible for an Esop company to utilize SBA financing?
Yes, it is. Yes, it is. I don't know how far we want to go, but yes, typically this would have to be done outside of the PLP authority, which Michelle referenced earlier. This usually has to be done where the SBA has to be a partner in the approval process and approve it. But yes, ESOP structures are eligible for SBA financing.
Okay. Are there any prepayment penalties with a 504 or an SBA loan that would prevent refinance?
There are prepays under a 504. It's based upon the rate, the underlying note rate. Right now, the underlying note rate is roughly about 1.6%. So it starts out at 1.6% and decreases by 10% each year for a 20 or 25-year bond. The 10-year bonds are more for equipment. Those are the first 5 years of the loan. But with rates being so low, the prepayment really is not an issue. And it's based upon that rate and decreases by 10%. So it's out there, but it's not a kind of a disqualifier once you put numbers to it.
Okay. Brian?
Yeah, on a 7A loan, it's going to be more on your real estate loans. Typically, no, there is not prepayment penalties, but if the loan's maturity date is 15 years or longer, the SBA does have a structure where if it's paid off in the first year, there would be a 5% fee. In the second year, a 3% fee. In the third year, a 1% fee.
Okay. And this will be the last question. Then we'll head on a couple of PPP questions and then we'll wrap up. Can SBA loans stay in place if you switch banks? Or do you have to go through the whole approval process again?
I can speak to 504 and flip it over to you, Brian. The 504, yeah, that's one of the benefits, and it's kind of an unknown benefit. Is, yeah, you can move to another bank with your first mortgage, and we would subordinate to that. It's not like you're tied in to one specific lender. So if you're looking at, moving over to Wintrust from another XYZ bank, and you want to refinance your first, we'll subordinate to that. So you're not locked into that specific bank, and you can move banks.
On a typical SBA 7A or Express, it typically no. There's a lot of closing and documentation requirements. It's difficult for another lender to take on the liability, as we talked about. The bank funds the SBA loan. The SBA does not put any cash out like they do on a 504 when they pay off the debenture. It stays with the bank until a guarantee request is honored in the event of a default. That guarantee is done based on all of your paperwork and your documentation and how you've maintained your files. It can happen. I guess it's a little bit harder, but it can happen. It does happen typically if there's acquisitions of one bank to another bank. But typically, no, the loan is going to stay. It can be refinanced, but typically it's not just going to shift from one bank to the other bank.
Okay, thank you. Let's transition over again. The intent of this presentation was not to hit on PPP, EIDL, and other government loans. It was specific to 504 and 7A, but we did have several PPP, EIDL, and other questions come in. So let me ask this one. What relief is available, including PPP, to customers to apply for?
I'll take that. Right now, the main relief available would be PPP, the EIDL loans, the shuttered venues grant, and recently approved in the American Rescue Plan is the Restaurant Revitalization Fund. We don't have realistically any information on that yet. We're expecting it to be released in the near future, but those would be the four main programs available through SBA.
Okay. For PPP forgiveness in the second round, what are the benchmarks? What are the guidelines for forgiveness in the second round?
A lot of information in that answer. I'll do my best to cover it quickly. 60% of the loan proceeds must be used on payroll. The other 40% can be used on any of the other eligible categories, which can include rent, fixing property damage, which was expanded in the current act. As far as forgiveness goes, your covered period begins the day of disbursement. You can use your funds anywhere from 8 to 24 weeks, anywhere in between, and that would be your covered period. If it is a second draw PPP loan, you would also need to provide the documentation to shore up your 25% gross receipt reduction. And recently, one of the best benefits, I guess I would say, is the current plan expanded the use of the 3508S form, which is the simplified forgiveness application, and it increased that to loan amounts of $150,000 or less. And there's significantly less information that needs to be provided. You're not shoring up all of your use of proceeds. You're applying, providing the information, and the SBA is making much faster decisions on those 3508S forms than they are on the larger loan amounts.
Great. Does the EIDL advance impact PPP loan forgiveness?
Originally, it did. The SBA was deducting the amount eligible forgiveness by the amount of the EIDL advance. That had since been amended, and the EIDL advance should no longer be reducing the amount of forgiveness approved by the SBA. But most importantly, any EIDL advance that was originally deducted prior to the amendment was to be subsequently paid by the SBA.
Okay. And this will be our last question regarding PPP and SBA disaster loans. Is it possible for those loan payments to be extended?
For PPP, there is if your loan closed in the original wave at the beginning of this in 2020, there was a 2-year term that did get extended to a 5-year term. In order to extend any loans that were approved with a 2-year term, it would just need to be mutually agreeable between the customer and the bank. An amendment can be executed to extend it to 5 years. If the loan was approved at 5 years or was expanded to 5 years, no, it's a 5-year hard term right now. We're still waiting on additional guidance regarding any changes to servicing requirements. If a business was not able to survive despite the help of the PPP loan and ended up in a bankruptcy or closing its doors, we are still waiting on additional guidance from the SBA on how to handle those situations. But you can extend from 2 years to 5 years. At 5 years right now, that's the high end of it. And as far as EIDL loans go, banks are not really involved with the EIDL process right now. So my only recommendation would be contact your local servicing center and discuss whatever options and needs you have. Typically, the SBA wants to be reasonable because they do want to put you in a position to be able to repay the debt as opposed to having to make it a taxpayer write-off.
Great. Well, this was a great session. I appreciate all the questions that came in. I'll wrap up by saying if you're still having a difficult time figuring out which loan to consider, please reach out to your Wintrust banker. We do have a proprietary tool that will compare a conventional loan to a 504 loan to a 7A loan. It will incorporate fees and different percentages of equity required. So please reach out to your Wintrust banker for that comparison. I'd like to thank our experts, Joel Hirscher, Brian Rhines, who were great, chock full of information. We'll leave their contact information up on our last slide here. Appreciate your time, and let's go SBA. Have a great day.